Hi everyone, welcome to AGM. Before 50% faster preparation, I am Chandra Prakash Joshi. In this video, I am going to tell you an excellent opportunity of job of a risk manager. First, let me explain you the profile of a risk manager. What a risk manager does. Risk is everywhere. Every aspect of life, there is risk. But here, when we are talking about job of a risk manager, we are talking about the risk that is there in corporations, that is there in the businesses, that is there in any organization, whether it is government or private. There are three main things a risk manager does. First, identifying the risk. Second, assessing the risk, the impact. And the third is the risk mitigation. Let me explain you step by step. The first one, risk identification. It looks actually very simple, but it requires you expertise of the industry, experience of working in a sector, because there are so many risks, and which one you shall take up in the organization, you can only decide first based on your experience. Let me explain you. In risk, you can have financial risk. For any company, there must be some issues related to the finance, because ultimately business is finance. Take for example of an exporter. Suppose you are a garment exporter company, and in financial risk, let me take you two examples. One is market risk, another is credit risk. Market risk, as the name suggests, is because of the fluctuations in the market. So you are a garment exporter and you export garment, say, to US. You are getting your payment in USD. The payment comes, say, up to 3 months. Today, the price of the USD is suppose 85 rupees, and after 3 months, if it declines to 75 rupees, so for, say, 1 million USD payment, you are going to get 85 million today, but after 3 months, you are getting only 75 million. You have a loss of 10 million. So this is the market risk. Then there are various other risks related to market. Credit risk is risk of default. You have exported to this party in US and the party got bankrupt because of the situations in the other market. Now your entire money is gone. So there are ways to identify such kind of risk. And the financial risks are actually looking more complex when you hear right now, but these are comparatively easier to quantify. We will come to that when we talk about the assessment part. The other kind of risk, which are more interesting, will be operational risk. You are a garment manufacturing firm. What kind of operations you have? You have labors, you have raw material. You have to buy raw material to make these t-shirts, shirts, pants, etc. So there are risks related to technology, related to, say, people, labor strike, or related to some supply chain disruptions. So the raw material has to come from, say, somewhere in South India, and you have this factory in North India. So all these kind of issues also poses risk in the business, called an operational risk. Then there are policy risk. There is a change in the government policy. There is some change in the regulation. Say, for example, you are also exporting to Canada, and today you are hearing there are tensions between India and Canada. So government comes out with something that, okay, we are not allowing export of this commodity. It happens. So you have nothing to do in that, but you have to see that this kind of risk can come. And fourth, very important, is strategic risk. The risk is because of the business you are doing vis-a-vis competition, vis-a-vis change in the market. Taking again the example of this garment manufacturer, suppose in the market, the customer preference goes more towards the synthetic fiber, and you are making cotton fiber based t-shirts or trousers, etc. People like iron shirt, or maybe they don't want to spend money on regular washing, so they start preferring the synthetic fiber. There is a company in the market, and that gives you bigger challenge. These kind of strategic risks are also to be identified. Now, the first job of identification is done. Is that enough? No, we have just identified. Second important step is the assessment of risk. Which risk poses what kind of the losses? So you have to give a quantity, a number to it. There are different methods, well-defined methods for it. Definitely, I am not going into the details of that. But if you take, for example, as I gave you the example of that in market risk, you can give some assumption that the dollar may go to this range. So you can quantify that my maximum loss in this based on the say last 10-year fluctuations of the dollar versus USD prices, say 5 lakh, 10 lakh, you quantify that. Same way, in financial risk, there is another risk called risk of default. You can give a probability of default. You can arrive at a number with the better statistical tools, probability of default, loss at default, and that is the way to quantify the risk. Now you have quantified the risk. Job is done? Not yet. We have to mitigate the risk. Please understand this word very, very carefully. You can't eliminate that risk. Till the time you are in the business, there are risks. So you can only mitigate the risk. For risk mitigation, there are then various tools available. Say, for example, in this case of this dollar situation, you can buy a forward contract. You can buy a future contract. You are actually purchasing dollars versus INR because you are going to sell the dollars in future, say after 3 months. So these are called hedging techniques. There are various insurances available for the operational risk, including the risk arising say out of the fire. Right? So you can do many kind of insurances. So this is the way to mitigate the risk. Therefore, you must have understood that the job of risk manager is actually very, very challenging. It requires understanding the entire business and outside business policy, regulation, everything, and then using statistical methodologies, using computer-based models, and identifying, assessing, mitigating the risk. Now you must be thinking, what ultimately is happening here? Ultimately, it is a risk-reward situation. So you have to take business risk, but you quantify that, tell the management, this is the maximum risk we are taking and these are the rewards. Job looks interesting. How to get into these kind of jobs? These are available, and these are available in top companies, top consulting firms. We have one such opportunity. The details are given in the description below. If you are qualified enough, we will contact you. We have to definitely qualify in the written exam. You have to qualify in the interview, and you will start as a risk analyst. Day one, not as a risk manager. You will start as a risk analyst, and you will definitely become a risk manager because this is one of the very prestigious company which is offering a job here. If you find it interesting, share this video, like this video. Maybe your friends are getting benefited. All the best. Prepare 50% fast with exam. Thank you.